And that is today's closing bell from the New York Stock Exchange. The Dow Jones ended the day in the green, up more than 370 points. The S&P 500 and NASDAQ also ended in the green. The S&P 500 is up about 1%, and the NASDAQ is up nearly 1.5%. Michael Landsberg joins me for more. He's the Chief Investment Officer at Landsberg Bennet Private Wealth Management. Let's get started with the question that we want to know every day. What was driving the market today?
I think a lot of it had to do with how poorly the markets performed last week. I mean, we had a really rough week. I think there was some anxiety, and I think, coming into tomorrow, I think there's some optimism that the inflation number is not going to be as bad as it's been. It's going to show a continual, deceleration. So I think people are excited about that.
So tell me a little bit more about that. The January CPI report is set to come out tomorrow, as you mentioned. How will those numbers impact federal interest rates moving forward for the rest of 2023? Do we expect the Fed to continue the hikes that they had been implementing?
I absolutely do. I think there's a little bit of a disconnect between what we're going to see tomorrow and what the Fed's going to do. I think consensus is around 6.2. We actually think it's going to be a little bit lower than that, maybe right at 6. But at the end of the day, it's nowhere near the 2% long-term rate that the Fed targets. So we anticipate a raise in March, and a raise in May. I think you get probably 75 basis points more between the two of those. I think really inflation's last year's story. We peaked at 9% in June. We've slowly been going lower. Without it being a big hiccup somewhere along the line, I think it continues to trend lower towards what we think is going to be around a 4 at the end of the year. But the Fed still knows it's nowhere near where that needs to be, and they're going to continue to raise rates. And I think that's kind of what we're looking at, is positioning for what they're going to do, not the inflation number itself.
Far from it. Now, the last batch of fourth quarter earnings are also coming out this week, including from Airbnb, Coca-Cola, and our parent company, Paramount. How are those expected to impact those fears of recession that we've been dealing with for a while now?
I think you hit it on the head. I mean, we look at earnings. I don't really look at estimates. I look at what people report. And right now, about 70% of the S&P 500 is reported. It's down 2.3% year over year. That's not good. NASDAQ's worse. I think about a little bit more than half of NASDAQ's reported. It's down 14% year over year. That's the third quarter in a row with negative earnings. So to me, that's what you want to focus on. I think the market may rally tomorrow because it was a 6% print instead of 6.2. But in reality, earnings drives share prices, at least in the medium to longer term. And so any kind of strength in some of these sectors, I'd probably look to sell and look to position myself more defensively, given the fact that we think earnings are going to be rough for the next couple quarters.
Well, thank you for that advice, Michael Landsberg from Landsberg Bennet Private Wealth Management. We appreciate your time.